Hello, my name is Nicola, and today I would like to tell you about an investment thesis for the stock FIVE Bel0w. This is not professional financial advice. Always check with your advisor. This is for educational purposes. So, what is FIVE Bel0w? FIVE Bel0w is a retailer based in the United States. They have over 950 locations in 38 states, and they were founded in 2002. Their business model is to sell trendy fashion, clothing, technology items that go up to $5, with some items going up to $10. And their business model is to grow the number of locations, attract new customers, grow their brand identity, and increase their margins. So there are three reasons why I'm bullish outlook on FIVE Bel0w. The first reason is the fundamental analysis, which is how well they're managing their money and generating money. The second reason is how the retail sector is doing during the pandemic. And the third reason is the price setup on the chart and some technical analysis for the chart pattern. So let's get into it. The first thing I'd like to talk about is the fundamental analysis. So how the company is generating money. Well, they're a retailer and their sales are growing at 22% over the last 5 years. Their earnings before income tax, depreciation, amortization is growing at 14% average over the last 6 years. And their gross margin is 35%, operating margin 12%, and net margin 8%. So they are steadily generating revenue and generating earnings. They have a very healthy balance sheet. So this is very good news when a company is starting to struggle with its sales, and they're starting to struggle for reasons unrelated specifically to the company. They're hit hard by the pandemic. There's restrictions, people not going to retail outlets as much. So the reasons they are not generating money currently is outside of the company's hands, which is a great reason we can get the stock at a discount on the stock market. Speaking of their balance sheet, they have $260 million in cash and another $300 million in inventory, and their current liabilities are $350 million, which means they have a current ratio of 1.6. So they have 1.6 times more current assets to current liabilities. So they can very easily manage their debt and they're financially healthy. If we compare Costco has a 1.1 current ratio and Starbucks has a 0.7 current ratio. FIVE Bel0w once again has 1.6 current ratio, so they're very well able to handle the drop in revenue. How much has sales dropped? Well, in this quarter, they've dropped 45% compared to the same quarter last year. However, year over year, they've still increased their sales 3% compared to last year. And here in Canada, we have a company called Dollarama, which is similar. It sells these cheap items, but like good quality cheap items. And they've also struggled this quarter. And Dollarama has increased its year-over-year sales by 2%. So FIVE Bel0w has increased theirs by 3%. So they're similar to what the competition is doing. So that was their fundamental analysis: a reliable company that generates steady money, steady earnings, and a healthy balance sheet. Now let's move on to how the retail sector is doing during the pandemic. So surprisingly, a good point for FIVE Bel0w is that the retail sector is doing fairly well. There was a drop in the first quarter of this year from January till now. But since then, most retail stocks have recovered. The retail ETFs, such as XRT, the S&P 500 Index Retail ETF, has recovered from this drop. Not to an all-time high, but it has recovered nearly to an all-time high. And then the online retailer ETF, iBuy, has soar to new heights because this is online retail. FIVE Bel0w does sell online. They started in 2016, so they can handle, adjust their business model for online sales as well. So the retail companies have recovered. That was point number 2, and the retail outlook is good from here. Now the third factor is the technical analysis based on their chart pattern. Some people might not believe in technical analysis, but if you follow it, there is some indicators that show FIVE Bel0w can move in a bullish direction. The first one being the cup with handle pattern. So the price dropped with the pandemic epidemic, and then it has since started to recover, and now it's starting to pull back a little bit and level off. That's a cup with a handle, and the volume on the pullback is small, so there's not much steam selling off. So once the price increases past the peak of the handle, the price can go to high directions. The other indicators we have is the moving averages. The 10-week moving average has crossed the 20-week moving average, and it's getting near to crossing the 50-week moving average, which is a bullish sign with price closing above those levels. And there is some divergence. For the last 3 months, price has been increasing, but for the last month, it's decreased pullback. But for the last 3 months, momentum has been increasing over the last 3 months. So there is some bullish divergence showing that the stock can go to continue on this bullish run. So that was my outlook. If you are bullish on the overall stock market, I think FIVE Bel0w is a retailer that can increase bullishly with the market, and you can get it at a discount. It has solid fundamentals, solid balance sheet. The retail sector is recovering well, and the technicals are lining up. So those are my 3 reasons for the stock FIVE Bel0w. I hope you enjoyed this video. Once again, this is not investment advice. This is strictly for educational purposes. Always check with your advisor, and I hope you've learned something. Thank you. Bye.